Vinit Sambre joining in for a longer term view though. He's head Equities DSP Investment Managers. Vinit, very good morning to you and great to have you on the show today. Um,
Hi, good morning.
it's jittery out there. It's jittery out there, I would say, on a global markets perspective, Indian markets definitely. What is your sense of what's going on right now?
Yeah, so see, I think as a market, first of all, last 3 years have been beautiful for the Indian equities, and we have seen sort of a linear up move as far as the markets are concerned. But we have actually, in a way, reached a bit of an inflection point when we look at the corporate earnings growth, and from a high growth of let's say 20% plus over the course of the last 3 years. Now we are heading towards more normalized the India rate of corporate earnings, which is let's say 11 to 12% kind of a rate as far as the next few years are concerned. But FY25 we are seeing even slower rate than that, and I think if we just go by the stock market returns over long period of time, they tend to track the earnings growth quite beautifully. So from that perspective, I think markets had seen quite a big up move in the last 3 years on the back of strong earnings growth. And I would say that most of the macro events which keeps taking place tends to get addressed if the growth rates are decent. And when we see that sort of challenge coming up, I would say that markets will sort of take a cue from there. We would sort of enter this year with a bit of a caution because of the earnings growth moderating. And I would say once we have some bit of visibility on the earnings catching up, and that's where when we would say that the markets will try and find a new direction. One more point to add, let me also mention that the last 3 years we have seen a new set of investors which have entered the market, and they have not seen maybe volatility or moderation in earnings, and hence this becomes crucial. And I say this is an inflection point because their behaviors and their volatility, their total flows in the market is also going to impact how the markets are going to look like.
I'm just wondering if you are going to be looking at this present correction as an opportunity to shore up, Vinit. And, with a longer term perspective, this is the year that's giving you an opportunity. If you look at it from that point of view, the last 4 years maybe didn't. Do you have that perspective at all, or is that overly optimistic?
No, I think you're right. We keep looking for these anomalies in the market, and especially so in a bull market environment where you hardly find ideas with a good margin of safety. So I think this correction, in a way, from our perspective, definitely is a healthy correction. It was much needed during, as we see, from the last 3 years of linear up move. And I think we'll try and find opportunities. Nonetheless, let me also add that even during the bull markets, there are a lot of sector segments which are not participating equally in the bull market. So in those periods, we keep looking at those kind of opportunities. So you're right. From the long-term perspective, when we are looking at the India growth story, where we are convinced about our economy and the long-term picture of the economy, I think these periods like these are turning out to be, sort of a opportune time for us to, not bottom fish, but try to figure out opportunities if with a decent margin of safety.
Vinit, good morning. Hiral on this side. Interesting point that you made as well, that yes, whether a bull market or a bear market, you do find opportunities of investments. But taking the current correction into consideration, which you say is a healthy one, where are you finding the moat? Where are you seeing reasonable return on capital employed? Because those are the companies which actually have the ability to outpace the growth story then.
You're absolutely right, Hiral. We are trying to look for companies with strong moats, good cash flow, decent ROCs. And I think across sectors, we have great divergence. There are companies which provide those kind of metrics. And then there are companies which are running on sort of narratives. So across the sector, we try to find these opportunities. But broadly, if I have to, talk from the sector perspective, we see such opportunities largely present in sectors like healthcare, within which we have pharmaceutical, hospitals, segment like IT, where companies do generate decent cash flows, ROEs. Consumer as a pack has structurally been a segment which does provide those opportunities. Now, in all of these, what we need to definitely do is try and understand where in the valuation and business cycles are these, and then try to build our exposures. So at the moment, we are thinking about healthcare being one where the sustainability of earnings is going to be good, and the valuations are not, they have gone higher, but they're not very expensive in a way. IT sector, we saw TCS calling out that there are signs of recovery. The decision making is turning out faster. So I would imagine that as the US sort of comes back in terms of the momentum, the IT sector should also produce decent opportunities. The stocks, while they are not very cheap, but as the business momentum picks up, maybe we would find opportunities out there. Similarly, in case of consumers, we believe consumer has been a story which has been again got moderated since COVID. Earlier, it used to be the entry level. Now we are seeing more urban consumption sort of getting hit. I would say that the opportunity here is going to be pretty long term. The Indians, the middle age income, as the income level rises, I think they are going to spend on better products, high quality products, and we believe that that's category which we would want to look at during the down cycle. Maybe the valuations are not again very attractive, but in this market, I think these are the kind of opportunities we are sort of looking for as far as our funds are concerned.
Right. We need one space that I want to talk to you about is how global markets are getting tied up with India, right? You're expecting the dollar to decline. The bond yield curve has also deepened, right? So because of the bond yield curve, which is steepened, the dollar is declining. You're talking about fewer rate cuts in the US that probably will aid emerging markets as well. So how are you looking at the export-facing sectors? How does that outlook change, number one? And do you think then the domestic cyclicals are well placed?
So see, at the moment, I think we are, so first of all, let us break down the whole exports opportunities into the ones which are already present, companies which are already competitive and they are continuing to export. So within that, we have, IT generally doing well. If the trend changes, they will capture their share of growth. Auto ancillaries, I think they have built robust businesses. They have built very competitive businesses to tap the international markets. I think those will continue, and that is only going to grow. The third category is as I said, healthcare. I think there Indian companies have found their sweet spot in terms of their strength of chemistry, their strength of understanding the US generics market, and I think India has a great competence out there as well. So I think some of these, I don't find a reason for these companies to not progressively keep doing well as far as the international markets are concerned. I think the newer opportunities is something which maybe we are trying to target, but there could be some kind of let's say the time horizons could may not match as the expectation. So the new areas like the electronics or the components, electronic components, or the air conditioner, all of these categories where the government is trying to push, there we are seeing that companies could take slightly longer, but I think those are the opportunities which will mean that our the external accounts slightly keep becoming better eventually, and it helps our currency. So I think that's what I believe as far as the external environment is concerned. To answer your question about where are we aligning ourselves in terms of the portfolio mix, I think we are okay even looking at some of the companies which are established globally and are trying to seek global share of the market. Today, some regions like Europe and all may be slow for them, but I think the long-term picture gives a good view about these companies to us. But by and large, domestic-oriented economy, domestic-linked companies are likely to do slightly better in the current global environment as such.
Right. So, Vinit, we just have a minute to go right now. The top pick with regards to the sector that you have as of now.
So I think clearly what, as I said, we are trying to look at maybe the sectors which are today in the lows of their cycle, and we see that a lot of the companies within the, let's say, building materials or chemicals or metals, they have seen the low cycle today because of all the macro setup or the environment where we are in today. I would imagine that as the cycles change, some of these categories should do well. We continue to have a good view on healthcare, which should remain for this year. Last year, that healthcare sector produced the highest return. I think that could continue this year as well. And maybe IT comes out as a dark horse and starts doing well. So I think you asked one, but I have given two, three options from my side.
Right. So these are three options that Vinit is betting big on as well from here on. Thank you, Vinit, so much.